It's Friday Coffee with your mortgage man, Eric. Here we go. So today we're going to talk about a transaction in the life of Mortgage Loan Originator. This transaction was mine last month. Now, I'm not going to mention any names of other lenders or people. I don't believe in shaming people publicly, but it is extremely important that you choose the right lender. And look, not all lenders are created equal, and I'm telling you, this is a really good example and a good lesson to learn. Pay attention. We're going to dive deep into the details of this story from point A to Z. Here we go. This borrower came to me from a referral back in 2016. Yep, believe it or not, 2016, April 2016. Called me, was referred to me from another one of my borrowers who I have a long-lasting relationship with their family. So they refer a number of people to me. This borrower called me up, said, hey, I'd like to meet with you in person, but I work during the week. Is there any way possible you can meet with me on a Saturday? And I obliged. But I said, look, I can't meet this Saturday. How's out of town? How's next Saturday? We set it up. He came to my office. He lives in North Phoenix. I'm in Ahwatukee, right? So, which is fine. He made the drive. Meet with him, pre-approve him. And he's off and he's shopping around. I lined him up with a realtor. And he puts the brakes on, which is not uncommon. People do that for whatever reason. A number of reasons, right? 2017 rolls around. He's back on the radar again. And we're looking for homes again, right? We're a little bit more serious this time. Pre-approve him once again. I had to repull credit, right, and do all those things again. So we get under contract this time, and he's looking for condos. So condos, you can still find stuff in the 1 to 150 market here in the Phoenix metropolitan area for a condo. Now condos, if you're not aware, usually come with very high monthly HOA fees, $150 to $350, right? Normally, it's not uncommon to have those types of homeowners association dues. So we were in contract for $145. That was the asking price. And he wouldn't go higher than $142.5. And they just couldn't come to terms on this, right? So he squashed the deal for $2,500. Keep in mind, it's more of a seller's market than it is a buyer's market. $2,500, cancels the deal, goes dark. Ghosts everyone from there. That's 2017. Nothing heard from him in 2018. We get into 2019, January, boom, I get the phone call. Hey, Eric, I'm under contract. Do you think you can close me by February the 5th? You know, I'm like, wow. And this is mid-January, you know, and we move quick. I'm like, yeah, okay, let's do this. But I'm also thinking, well, you're already talking to another lender, right? And you all obviously are dealing with another realtor at this point, which has me extremely concerned. So I pre-approve him, get everything repulled, right? We're up to date, we're good, we're rolling. And then I get the contract and I start filling in the blanks and the details start coming in. Now, here's where the story gets juicy, baby. Woo! We get under contract, not we. The borrower got under contract on January the 13th. I get the phone call on January the 22nd. He's not comfortable with his loan officer, can't get the loan officer to call him back. When the loan officer does call him back, he's not giving him straight answers, isn't answering his questions correctly, just feels uncomfortable with this loan officer. It was referred to him from the realtor. Naturally, yeah, every realtor has their referral partners. That's a given, right? Okay, so I asked the borrower, has an appraisal been done yet? Because it should have been. No appraisal been done. Okay, that's good. So you don't have to worry about spending money on an additional appraisal. We're buying a condo, so I was like, have the condo docs been ordered yet? So he doesn't even understand what that means, which is no surprise because the other loan officer, the other lender, hasn't given him much information. So I explained to him about purchasing a condo and the things that are needed with a condominium. The condo docs, the condo questionnaire form, the financials, the budget, all of those items are needed, and they are needed up front, and they come with a cost of anywhere from $300 to $500. Every management company is different as far as what they charge in fees for those condo docs. And you need them up front because here's the thing. Your condominium complex, it might not be approved. It might not be Fannie or Freddie approved. And even though there was a loan done on it, 2 months ago, doesn't necessarily mean that it's approvable or eligible, or the correct term is warrantable today. Why? Because you have the biggest things that throw a condominium complex into a non-warrantable situation are deficiency rates, occupancy rates, litigation, and they're not able to meet their reserve requirements. So it's usually 10% occupancy rates, 15% deficiency rates on their current, their HOA dues. Litigation, somebody suing the homeowners association, management company, because they tripped and fell, broke their ankle, something like that. Or they don't meet their reserve requirements, which is 10% of their operating yearly budget you got to have in reserves. That might sound all Chinese to you, and I get it. But they are the most common things of why a condominium complex would be denied or declared as non-warrantable, which means you're not getting a 3% down Fannie Mae loan with low interest rates on that specific unit. So that has to take place up front, and that's a borrower's cost. So I asked the buyer, has anybody talked to you? Have they charged your card for this? The answer was no. Okay, very interesting. We're 9 days into this. Nobody has ordered this guy's appraisal. Nobody has ordered the guy's condo docs. So I obviously take the file, disclose the file the following day on the 23rd, get everything back. On the 23rd, I have the appraisal ordered and condo docs ordered immediately. Boom. And we're rolling, right? Ironically, the following day, the 24th, the borrower or buyer finally gets a call in the evening from the other lender, of course, now because the lender knows that this borrower is canceling with him, and finally has his attention. And at that point is trying to retain the loan. And that point is trying to offer him a lower interest rate, which is interesting because the buyer thought he was locked in. So there's a little bit of misunderstanding there as well, that the lender never locked the borrower in at this other place as well. So obviously this buyer at this point, frustrated, is not going to continue onward with this other lender. I'm 2 days into this, and I already am further than what the other lender did in 10 days, right? So we end up... the close of escrow was the 12th of February. We were done by the 5th, a week early. But we didn't close a week early because the seller, yada, yada. But the moral to the story is this. Not all lenders are created equal. And I know there are other lenders that could probably go at the speed that I go. I wouldn't say the vast majority of them, but there are some of my other competitors that can probably operate at that speed, that capacity. The moral of the story is not all lenders are created equal. And you can see, follow me here, there's no way that other lender would have been able to close escrow early or on time. He didn't even order an appraisal or the condo docs 10 days into this. And what would have happened if we would have came back in the 11th hour and said, oh, hey, by the way, I'm sorry, but your condo's non-warrantable. Well, what's that mean, right? He hasn't even been explained to any of this, or what could possibly go wrong, what could take the train off the tracks. So that is just one transaction in the daily grind of being a mortgage loan originator, right? It's not all about, well, this person's got this interest rate and you've got this interest rate. I'm telling you, most of the times in the purchase arena, not refi, in the purchase arena, an interest rate is irrelevant because we don't know if that other lender is going to talk to you, communicate with you, ghost you, get your loan across the finish line on time, order the appraisal in a timely manner. Look, now I get it. Some realtors don't want you to order the appraisal on day one because of the home inspection. Yes, but once we've determined that there's nothing hugely or largely wrong in that home inspection, the green light's on for the appraisal. And now follow me here. The longer you wait for the appraisal and the condo documentation, and now you've got to order it on a rush, that's more expensive. And guess who gets the cost or the brunt of it? Or you got to ask your company to cover your error. Oh, I forgot to order the appraisal. Now I got to rush it. Can you give me a pricing exception for $50 or $100? You know, and that's a pain in the rear. And all that means is that you, as the loan originator, didn't do your job correctly. You weren't on top of your files. And I'm telling you, this happens time and time again. And there's no company out there that is exempt from this, unfortunately, because there are good originators and there are poor originators at every company. Follow me there. So, with that said, there is one transaction in the life of a mortgage loan originator. And today is Friday Coffee with your mortgage man, Eric, 602-757-2171. Come on down today. I got the deal. See you.